Hello, traders. My name is Anna, and I have Devet with me. I'm head coach at Leveraged, and Devet is trader at Leverage. So today we're looking through the trading room. We're going to talk about the charts. We'll try and analyze different pairs. If you have any requests, you can request them, and we'll go through those charts. Right, Devet, how has been your week?
Awesome.
Already
Good
Thursday.
morning.
How did that happen?
Already Thursday. Yeah,
I
it's
know.
been a good week. Yeah, not much to say. I've been getting up early, trading the Asian session.
Still, okay,
Still,
good.
I've been consistent with that.
Mhm.
Getting into a new routine, so that's fun.
Okay.
I do go to bed, try to go to bed earlier because then the day gets long.
Okay.
But it's been good, and yeah, all good. It's been a busy week, work-wise, trading-wise. It's been interesting. Yesterday, I think there was a lot of news and stuff, so it was nice being in the market early in the morning and then being done with it and kind of having the day, not having to worry
Yeah,
about the chart. So
for
that was
sure.
nice. I think the afternoon there was some scalping or a few opportunities, which was great. But yeah, all in all, it's good. Life is about to get very exciting, so we're just bracing for the calm before the storm.
Yep.
But yeah, it's all good. Did you
Well,
have a
that's
good week?
good. That's good to hear. So I'm just like curious because obviously now you're trading the Asia session for about 2 weeks, or is it three
It's 2
already?
weeks now. It's almost
Yeah.
2 weeks. Yeah.
So how do you find compared, I'm not talking about like waking up earlier and all that, but
Mm.
like chart itself. So is there the truth then that the Asia session moves much slower with less wicking? And have you noticed that?
I've definitely noticed. It feels more, I want to say, controlled in a sense
Mm-hmm.
that it doesn't feel as impulsive and manipulative as,
Mm.
let's say, the London Open or the New
Yeah.
York Open. So it feels calmer in a sense, but still good
Mhm.
moves. You still get decent ranges.
Yeah.
You're not going to necessarily catch a 100 pip or 100-point move, but that's
Mhm.
not the goal. But if you just manage your expectations with regards
Mhm.
to what you want, you can still get some decent moves. But I do feel it's calmer. It's not as manipulative or impulsive, which can be a good thing.
Yeah. Yeah.
Mm,
And
definitely.
I've heard the traders say the same thing is like, and I've noticed that although I haven't traded a session for a very long time, but when I was living in UK, then I would sometimes trade that.
Mm,
Like that was like years ago because I was trading EJ pair, and
mm.
then and also obviously my divorced wife of GJ as well.
Yes.
So that's another thing, right? And I do agree what you say. I mean, obviously, sometimes there's still movement in, like
Mm,
today, there was news on GJ, right? So the GJ just shoot up, right?
yes.
But mostly it is like you say, it's calmer, it's more controlled, and it
Mm,
feels like, once you get your bias, then it's like, it's going to go smoothly up or smoothly down. There's
exactly that.
not a lot of
Yes. Fake
this.
moves. Yeah.
Yes, exactly.
Mm,
So, and now it makes me think maybe there is some truth, when we say, you trade better when there's sun out, but maybe it's because you live in Bali and you trade Asia session.
exactly. Exactly.
So it's like, I'm trying to
Yeah.
find maybe, you know what, like
Yeah.
maybe I do need to move. It's just, one of those things.
Yeah. So what
No.
I've been doing, I've looked at the Asia session, and then after work when I get home, so it's more like
Mhm.
the New York PM session. It's like
Oh, you like a
basically
back test kind of thing? Like you just
yeah,
go through the chat?
just go through the charts and then look
Mhm.
at the price action uh, after New York. So I'll show you on the chart when we get there, and
Okay.
that's also much calmer. Like the news is passed. It's almost as if you catch those low hanging fruit. Like the
Hmm.
main move happened, and then you just catch the last bit. So it's also not massive trades, but it moves
Mhm.
decently well. Um, so yeah, it's interesting to see that. I always thought that you have to be in the action, in the session, to get the best trades, and
Mhm.
often you can get some of the best trades
Yeah.
then. But having calmer setups or trading a price action that's not as volatile I'm not saying it doesn't move, but it's not that manipulative. Can be quite profitable and good as well. So I'm quite excited to test it more and see what happens.
Yeah. Okay. I'm excited as well. So, I mean, I'm not sure if there's going to be, probably not a live stream next week. Definitely not. But it would be
No.
interesting to catch up with you and see how you're doing, maybe in 2-3 weeks time, just to
Yes.
see how the things are going. So yeah, that is super exciting. Okay. Right. Couple of things. So for those who don't know, you can guys register, go on your dashboard and register for the webinar, because today is a really interesting webinar on AI tools. Here at Leverage, we always talk about these AI tools, and I'm testing them out myself, and it's been now over a month, actually.
Okay.
Just a little bit over a month.
I'm excited to see what the account is saying.
I know what account is saying, where account is laying, right? So anyhow, I'll show you what it is. I'm currently into 2 trade. If you squeeze your eyes good enough, it's going to be at 13,000, which is 1.3%. Because I'm trading 1 million account, which is our executive account. And then, I'll show you. I think the best thing to do is just show all the history. And there's reds, there's greens, there's more greens, there's more reds. Look at that, even break even trade there. But it's just one of those things. Is good to see when you open up. It's not only red. There are losses, well, which is normal, right? But then I don't think that I've ever had three in a row. There has never been more than 3 losses in a row, which is really, really good.
That's great. That's good.
But obviously, then another thing is it's not really 1-to-1. The rest reward is, normally my winnings is like, because I'm risking 2,500, right? So 0.25%. Yes. So my winnings will be 1,000, 1,500. Sometimes there's like 4,000 win. Sometimes there's, a 400 win. Sometimes I close them. Just, at the break even as well, because I do look also at the news. Like yesterday was high impact news, and yesterday were so many signals. But I'm like, I need to think, and that's why I say AI is great. It helps you to make better decisions in the market, but you always need to use your own brain, your own head. You always need to make sure that the decision comes with the logic. It's not just like, hey, there's a signal, I'm going to buy, I'm going to sell. So it always have to come with some, I like to use word common sense. So as a trader, just use a common sense. Don't just jump into trades, right? But yeah, and I mean, so far it's been really interesting. Like for me as well, sometimes I feel uncomfortable, and I'll talk about these things more also in webinar, how AI actually can challenge us as traders and make us feel uncomfortable, because it's almost like, AI is telling me what to do. I'm like, who are you to tell me what to do? I'm a trader myself. Who, so there's like a lot of things going like internally as well. So, but if you ask me for results, currently my equity is 15,000. My balance is 13. I'm in 2 trades. They're both doing okay. And it's just, it's a journey. And I'm kind of excited for this, because the results are not too good, if that makes sense. Because
it's not bad, but it's also not like amazing, super great.
Exactly. So it's just like, the kind of average thing. Although I do have, I would say excuses. I am also trading full time myself. I'm on a floor. I'm also leading, I have a leading role in the Leverage company, which is head coach. So it takes a lot of my time, and I don't have all the time to look at these signals. And I know for sure I missed good signals, and I know for sure I missed some bad ones. So it's, I really don't love using this word, David. Don't judge me here, but I'll say I do sometimes feel like, I'm lucky because I didn't take that trade, or I'm unlucky because I took that one. So
makes sense.
I think in trading, there's always going to be that lack, like, there's going to be, oh, you're lucky, or you're unlucky. And I don't like this, because trading shouldn't be about luck, but at the same time, it is. And maybe instead of saying luck, we can say timing, it was just
you're at the right place at the right time.
Exactly. Yes. So it's just, I mean, we can play around the words, but I think in all essence, somewhere there, it is just, the luck factor in there that, you were lucky or you got unlucky. And because of the timing, how everything was and all this. But anyhow, today, which is 1 p.m. GMT, you can go and register on your dashboard, go to Academy, and there's courses, webinars, and you can register for the webinar. Now, if you cannot make it live, that's fine. You will be able to watch the recording, but only then if you register. So please go and register.
Yes. Go register.
Exactly. Go to, like I'm saying, register, and the vet is like my, cheerleader. Register.
Echoing you.
So yeah, go and register, and then 1 p.m. today, it's going to be a great webinar. So I'm going to share more of my also like the results that I've been getting on this account, but it's webinar is more essence about how you can use those AI tools to apply them in your trading. So that's going to be, the main thing there is to show you guys how you can use these AI tools.
Right.
So yeah. Anyhow, David, I would like to see your chart. If you could, just talk what you've been up to, what you're looking at. And yeah, let us see what's happening.
You just want to see clean charts. That's all.
Yes, I love clean charts. I mean, the vet is like an artist. Okay, when it comes to like charts, he's an artist. I mean, love his charts.
Okay, so I'm gonna be not too long, but I'd made I don't think you've uploaded it or yet, but I made a new video in terms of VWAP for the community and for the webinars. And these trades I've plotted down based on what I've shared regarding the VWAP. So very simple. The process would be I'm looking for a swing high or low that has an engulfment like this one, or a rejection candle like this one. See the strong rejection candle. And then what I would do is I would place a VWAP on the engulfment, and when price breaks below the VWAP, I would want to see it retest and then trade back down towards that low where the engulfment comes from, where the swing high is. That's pretty much it. So what I take from this is that as long as we're above the VWAP, this engulfment is holding and we're trading towards the upside, we're bullish. The moment we break it, it becomes resistance, and then more often than not, price will return to the point of origin, meaning the place where it originated from, which is this low right here. And then you look for an entry. So this is what I'm looking at on Aussie dollar with that specific approach. And this is something similar on GU. So if we just look at the swing highs, swing lows, and so here we had an engulfment, a rejection candle. If you place the VWAP on it, we broke above it and then traded back, broke below it, and then traded through it right there. Break it, trades to that low. Okay, but then we have one here as well. Broke through it, and we can see how price traded back towards it. And then the lowest one right over here broke through it. So that leads me to believe that potentially price could be trading lower. And we have this 5-minute fair value gap that price traded into. So more on this in the video, in the webinar that I did for VWAP. That should be in the leveraged community as soon as Anna has uploaded it.
Yep.
So that's something really interesting. And I took a few trades yesterday with pretty much the similar approach on this as well. I'm going to quickly find them. So this was a scalping one, but this exact same principle. So I would go on the 5 minutes, I would plot it on the VWAP, and you can see that for some reason the tool has changed, that it adds the high and low bands as well. So I constantly have to click buttons. But anyway, so we made the swing low right over here, rejection candle. With this low right there, right? We broke below it, came back, retested it, broke below again, and then I looked at this little area right here as a fair value gap to trade from, and we can see it moved down to the target. EU had a long opportunity. Must just find it because now the charts looks quite different. Here it is. So here we had a rejection, swing high. I placed the view up on it. The moment we broke above it, right over. So we first broke above it right here, traded back down. And I think this is also just that lucky thing because when I looked at it, I saw it and I saw this break above. And then when I went to the 1 minute time frame,
it disappeared.
you have to, and then I found it right here with this little order block right here. And it moved up, and the target would be that swing high. We have it right there. So in terms of for traders that want like a super mechanical approach, that's like step 1, step 2, step 3. This is very mechanical for that reason. So I made the video on it, and then for that reason, I also today just looked at potential opportunities. Does it play out? How often does it play out? Collecting data on it. So because often you find something, you see, this looks familiar or this looks interesting, but does it actually work? And how often does it work? And pretty much the same that you do with the AI trading. You're taking the trades that an AI signal gives you, and you're collecting data. Seeing how this works out in the long run. This morning on gold, I was looking for a short, which turned out to be a break even. So it was in this area. So let me quickly remember the process. So on the 1 hour, the higher time frames, we were trading in this massive fair value gap. And the idea was to see just a short pullback down before potentially going higher. So it was a pullback trade. And then on the 15-minute, I was in this area. A little rejection right there. I think it was and then on the 1 minute, it was in this area. Okay, so the thought process was as follow. We traded. So now looking at it, it was actually created perfect, like a double top. And I know that often price will trade away from the double top, but then find its way back to it. So it kind of becomes a magnet and trades to it. But we did create this fair value gap right here that we traded into, and we had this small one right up there as well. So my entry was in this area, somewhere, I can't remember exactly, a stop loss above. I was looking, it was like just 1.5, or it was a very short trade that I was looking for because I noted that we had this area right here that could act as a like a support area because price was just consolidating in this area. So I knew the price could react off of this area. And we came close, but not close enough, and then just reversed and took me out at break even on this one. So I think that was the idea this morning. And then
Can I ask you a quick question, maybe?
Yes.
So, see, like you say, you use the break evens. And again, I'm like curious because like the way I trade, for me, actually, it's better not to use them because many times the price will come to my break even, take me out, and then go into my direction. And it happens more often than it doesn't. So that's why I don't use the break evens. So obviously, there are different ways how to use the break even. I'm curious, how do you do it? Do you wait for like a price action break below whatever, and then you put it break even, or you have like certain, once it's 1-to-1, you put the break even? What is like your rule around that?
This morning, actually, when I went to break even, I was thinking of you, and I was actually thinking like Anna wouldn't have gone break even now. She would have kept the stop at the high. Thinking about you, but mostly because it is shorter trades, and then if I'm wrong, I'm going to be wrong. If it comes to my break even, it's going to go against me most of the time. So usually in this case, when we had a strong break in structure, my expectation is that if we go back to my entry, potentially we are going to completely reverse towards the upside, because it's not necessarily a trend continuation trade, it's often just a pullback, and the pullback
Mhm.
could be just very short. So if it's a pullback trade, then I would rather go to break even as soon as we break structure, so that, because if we break the structure and fail to continue lower, then it's going to be continuation towards the upside, right? So then I would rather be at break even and not take a full loss. So that's been my approach, more or less. So if it's a trend continuation trade, or
Yep.
a pullback trade, then I would rather put my stop loss
Mhm.
to break even as soon as possible, because if
Yeah.
it, as I said, if it goes against me without taking my TP, then I want to be
Mhm.
out. But if it's a trend continuation trade, then I'm more likely
Yeah.
to keep my stop at the area,
Mhm.
because the trend, I want to then just catch the trend. And then sometimes in terms of trailing, I would then, if it's a trend continuation trade,
Mhm.
maximize my TP but trail the stop below structure. I would sometimes do that as well, just to maximize on those trend moves, so that you're
Yeah.
not just catching a 2R or 1R, but catching maybe a bigger move,
Mhm.
but
Makes sense.
trailing your stop loss. So that's been
So
my approach.
yeah. So it's like, because this is like sometimes trader asks, so what is the break even rule should I use? And I'm like,
Mm.
that's not the right question. The right question would be what your data tells you. Like, should you
Yes.
use the price action, or should you use like one? Because I think the most popular, let's say the most used one within the traders that I have heard of, is normally once it hits 1-to-1, right? So once it's
Mm.
like 1-to-1, they're like, that's it, I'm taking the risk off and I'm putting the break even. But
Yes.
I have back tested both, right? And this is only, I'm speaking from my data, but what I have noticed is no matter what kind of risk management you choose to have, I truly believe that following the price action is always better choice,
Yes.
because the price will tell you what's going to happen. If you start to see there's like, breaks of lows and you're selling and you see break of low, it's like there is more
Mm.
indication that the price will go to your TP. So, and then you can
Mm.
decide, do you want to move it or not? But I think it's kind of, I'm not saying it's bad, because it's not. Many traders do use that 1-to-1 thing where they're like,
Mm.
once it's at 1-to-1, I'm gonna, this is it, like I'm putting to break even. But also what you explained, it just showed that again, you are using price action
Mm.
to then think of when do I need to move the
Mm.
stop to break even, when it's like when the price action is telling you that, right? So when there's indication. So yeah,
Yes,
I
because
love that way.
ultimately your stop loss is there to protect you if the trade is invalid,
Again,
if it's
yeah.
not going in the
Mhm.
anticipated direction. So your
Yeah.
stop loss should always be at a position that will invalidate the trade. So
Mm.
let's say you're going short, but I know the price could still pull back and retest this order block. Then I'm not going to go to break even, because we
Yep.
could still go up and retest this before continue lower. So
Yeah.
I'm going to keep my stop above this high, because if we go above this high, that means we have a change in
In direction.
in the direction and the market
Yeah.
structure, and then I don't want to be in it anymore.
Mm-hmm.
So just thinking of my stop loss in terms of price action, like you said, I have found
Mm-hmm.
to be the best way. So if I'm convinced that if we now take out this low and I'm still in the trade, then I would move my stop loss to break even, right?
Mm.
Because now we took out a low, liquidity low, then we could see a reversal happen. Okay, so that's why the take profit is just above it. It's like I want to be out of
Yep.
the trade.
Sense.
But if I were to hold a runner or only taking partials, then I would move my stop to break even, because
Mm-hmm.
now I'm securing so now I know there's a higher chance that it could reverse on me and go against me. So I'm
Mm.
rather gonna stay safe. Yeah.
Yeah. Okay. Awesome. Right. Did you went through all the pairs?
Yeah, more or less on what I was looking at. So
Right. Okay.
yeah,
I
we can
can
go.
share my analysis, and
Yes,
I do have
please.
one trade open. So
Yay.
okay. I know it's like, oh no. Right. So I'm going to share my chart analysis to see, what I'm up to. Let me just quickly pick the right screen for that. Okay. The right screen for this. So I don't overshare something that I shouldn't. It has happened. Um, right. So yesterday was eventful day because it was really, really interesting to see how nicely actually price was moving. I
Mm.
had this support area and I have been looking at it, and I was trying to buy here. I was stopped out by this wick in here. Very unfortunate. Okay. Very unfortunate situation there was. Okay.
Yeah.
And then it did reach my target, which is, and sometimes that's where I find comfort. Even
Mm.
though the trade lost, I was right on my bias. Like I was right on
Yes.
direction. It's just, can I say unlucky? Can I say wrong timing? I mean, I don't know, right?
Yeah.
But it's still always good to see that it's working. And then I did manage to get in shorts in here. So that was really good. So, whatever I lost, I covered and got even more. But yesterday was really, really interesting. Actually, not yesterday. That was already Tuesday happening when we did break the support, right? And I thought, oh man, it's going to be one of those times where you just break it and it just goes straight, right? Because I thought this is just going to melt and it's not coming back. But it did came back, like it did. So I'm gonna put this line in here, and this is 4 hours, and I'm entering 15 minutes, right? And it just gave me a beautiful sell
Oh, look at
opportunity.
that. Look at that.
Yes, beautiful, beautiful. And the only thing is, it did reach my target, but there was news, and I managed my trades on the news. I did manage to get like 0.45 hour on this because I needed to close before the news, and it was like on this candle here. So I'm happy about whatever I got. Now the
Mm.
thing is this, right? I never got a buy opportunity on GU because the trade was not in the zone. And I was like looking, I was like, but this is also the zone in here because this could be just seen as, a fake out or like a liquidity grab, and just price came to test lower, like this zone in here. So technically I could have, I mean, even now I could go to buys if this, is bullish, and I'm just trying to
Mm.
make a decision here. So I think what I see is this opportunity in here. And I
Okay.
mean, we could something like this, right? And it's simply because I'm already into buys on the EU, right? So if you look at the 4 hours, right? I mean, the price has this right in here. This is always confusing. And the thing is, I spoke about that zones are never like this, right? They're
Mm.
never perfect. Like you will never find a price action that moves this clearly. There will always be some wicks. There will always be some fake out. And it's just now it comes to your experience, your expertise, your experience in the market, how much you seen the charts. And I think the more you look at the charts, the more clearly you can see what's actually happening. But to have price action like this, I would say it's almost impossible. Very, very rarely you can get that perfect price action.
Mm.
So anyhow, I used this zone as my support because what happened here, it found the resistance, right? We thought it's going to break. We saw like in here, it did break. It came to the retest, and I was probably buying in here because that's what it looked like. You came nice rejection, and we're probably going to continue going higher. Well, it never happened. The market slapped me in the face, and we were starting to use this area in here, right, as a resistance, right? So it was trading below, came to retest. Probably in here, I was selling,
Mm.
and maybe even in here. Who knows? Like I can't remember, but that was May 25. Who knows? So, and I was selling, and this was used as a resistance here, and then we did break. And now we're using this as a support, right? So that's why this is my first retest. And I always say the first retest, which is of the zone, like first, this here is resistance. And now we have retested as a support because resistance and support, it's always changing, right?
Mm.
So the zone that was support can be resistance and other way around. So in the first touch is always the best one when it comes to like my probabilities when I look at my data. For example, like this trade in the comments, there's going to be first touch, or
Mm.
sometimes the next trade, if for example if something like this happens, we go higher, And then, this would be second touch. And in my
Okay.
data would be, this is my second touch trade. And what
Mm.
I've noticed is the first one is always the most profitable one. And the
That's
profitability is
purple.
quite high. It's quite high.
Mm.
It's over 80%. So I know this is like my A plus setup. Right? So I was waiting till very late yesterday after the FOMC happened, right? After the all move happened, I was waiting patiently. I went to bed after 1 o'clock in the morning because I've been waiting for this zone to
Waiting
hit.
for that.
Like, this is like, I do, like, guys, this is obviously, it shouldn't be like this, but I'm like, this is my money grab. This is my money bag. Like, this is here sitting, and I'm
Yes,
like,
you need
getting
to
all
grab it.
excited. But yeah, anyhow, so we can see that, the price did push. And this is the best example why I never put the break
Mm.
even. I could have, because one-on-one was hit, like one-on-one was here, right? If I would have put in that to the break even, what would happen? I would be taken out. I would be
Yes.
literally taken out in here. So, and it's like, I've seen it so many times and I'm like, I'm not doing that anymore because my data
Mm.
tells me something else. So
Yes.
anyhow, this is the first touch. Obviously, I do have trades that fail on the first touch. It's not like, I mean,
Mm.
I'm laughing that this is my money bag, but I have trades seen fail. And this is like part of the trading. This is how it is. Like, that's why we use proper risk management. That's why we
Mm.
plan our trades in advance that, whatever happens in this trade, I accept the loss. I accepted the risk. I accept the loss, and I move on. But obviously, it does hurt me to see that my A plus setups don't work. I'm not gonna lie, it does hurt me. I'm still a human as well. I still have my emotions,
Yes.
but it's also good to see that it is working, and it is working good. So anyhow, I think, let's see, the GU just closed. Is it 15-minute closure? Yeah. So basically, I could be getting in now like this. This would be my setup. But I'll tell you this, I'm not sure, because if I look at the 4 hours, okay, and this is where it's so important to listen the way you speak when you do your analysis. And that's why I say, actually, it's good to do it out loud, because
Mm.
once I start to use words, I'm not sure, I'm not really thinking that this is the area, because what I think, we might push into this area in here before we go higher. So that's why I
Yeah.
don't want to take this buy setup in here, because I'm scared. Not scared, because I see that there's potential for the price to go lower.
Color.
Right?
And also, I added 1,000 lots short. So
Okay,
I'm
definitely
just
not
putting it
getting
out
in
there.
now. Oh my
The
goodness.
the whale got in.
Okay, the whale got in. Right. I'm not buying. I'm just gonna wait until the price is gonna push in here. I'm just gonna wait. Okay, I'm not gonna buy. I'm just gonna wait until we get into this area in here. But at the same time, it's also interesting, like, to see how the price is printing. So this is
Mm.
like our low in here, and let's say if we fail to or like break the low, or if we come to break it and then we start to print the bullish price action, then I can also enter in here.
Yes.
Or something like this happens, where now this is the low, and let's see if it's going to be protected or not, if the price will push higher and take out this high. And this what here, that's called price action. And we are reading the price action. We are reacting from what's happening on the price action. So, I rather set out. And the thing is, I think even if we're going to go into this, let's say if we go into this zone, I think for the EU, I still have plenty to bounce from, even if it,
Yes.
the GU falls and EU comes again to retest this area. I still
Absolutely.
don't think safe enough. So yeah, the one thing is definitely for sure, just because you're buying EU and there's a buy setup on GU potential, because this is the zone that's not the cleanest one, right? It doesn't mean that I need to get in, right? It doesn't. It just, I need to wait for the perfect setup, for the setup that makes more sense to me. And I will see how the price action will print, if we're going to go, higher from here, or if we will come to retest and then, go from here. So yeah, we will see. And another thing though, I'm not sure if you use this, but I do love to look at these psychological levels in the market, which is, round numbers. So we can see that in here, it's also like my zone aligns with like 1.32. And that's like a psychological number, right? And who knows, maybe for those who are, let's say, selling still from these highs, they're waiting for the price to go into this level, and then maybe they will
before
take
adding.
off. Yes, before adding the buys, or or maybe they will wait.
Also, if they take off the sells, then that will also give a reaction.
Exactly. If they close their sell positions, they eventually, what's happening is they close sales, and it's like you buy.
Someone has to buy those sells, so they have to have willing opposite. That was a big thing. Understanding, for every buyer there needs to be a seller. For every seller there needs to be a buyer. That's very interesting.
My brain sometimes still cannot comprehend it. No.
I just said that as a matter of fact. I don't understand it. I just said it to sound smart.
It sounds smart, I know. And the thing is, this is what I say when it comes to like analysis, or when it comes to trading. I'm just going to say as it is. I like to keep it stupid simple, simple. It has to be so simple that, I see the zone, I go to my 15 minutes, I see the closure. If it's bullish, I'm in. If it's bearish, I'm in. And then my stops, they're below the lows or below the zone, right? So it just, and then I'm making a decision that makes more sense when looking at the price action. And it's like, I have tried so many things in trading. I have tried so many strategies, and the more complicated it is, the more confusing I get. Like, I get so confused that sometimes I remember like taking the trade, and I'm like thinking, what was that? Like, I struggle to see why I took the trade. And it should not be the case. No. Once I see my charts, I should know exactly what I'm going to do, because I understand my trading strategy from left to right, from top to bottom. And it's like, it just, it should make sense. And I find that so many traders struggle when, or sometimes I do this. Oh my, this is a torture. I do this exercise. So I will go, this is for one-on-one coaching sessions. Sometimes I go, okay, this is me exposing, right? So for those who sign up for one-on-one sessions, sometimes I go into your account and I'll take a trade and I'll put it on the chart, the trade that you took. And I'll show you the screenshot, and I'm like, look at this trade. What do you think about it? And they're like, oh, sometimes, maybe now no one will fall for it, because they will be like, oh, I need to think. But anyhow, somebody's, no, this doesn't make sense. Why would you enter in here? And I'm like, well, actually, this is your trade, buddy.
You took this trade.
And then we're like, oh no, that's my trade. What?
Yeah.
So it's definitely interesting. But like, if you show me 4 hours, I will be plotting my zones already. Like, I'm trying to see where are those touch points. I'm trying to see where are those levels, where are those big levels. And that's how my brain works. And I think because it's so easy to see those zones for me, I'll be able to tell if that was my trade or not, So, but if you trade something very, very complicated, you will struggle even to say that if that was your trade or not. It's just really, really hard. And I've seen traders making it so complicated, and it shouldn't be. It really shouldn't.
10-page checklist just before taking a trade.
Checklist. Yeah, checklist. Remember my long checklist? Like, as my hands, I had like 12 points or something. This is in line? Yes. Is this in line? Yes. You go to 7. Is this in line? 8. Number 8 is no. Okay, I'm not taking the trade then. Okay, bye.
Bye. See you next time.
See you later. Never taking the trade. Okay, we have comment trade up. Jason saying, each trade is built over time and experience and often makes no sense to others, but does not matter as long as you know what is happening and it can explain why it fits to the rules. Exactly. If it's you who can explain why the trade is taken, if it's you who, like, that's why I asked the questions for David. When do you put the break even? And he's like, well, I'm looking more at the price action. So yeah, it makes sense to you. But if someone says 1-to-1 and then I put it and I'm like, okay, that's what makes sense to you. But it's like, but it still needs to make sense. And you need to know why you're doing what you're doing, right? So,
yes.
And yeah, I agree. Really is inexperience. I love that one as well. Experience, especially on the charts. And that's what I say. I see the chart and I'm already plotting my lines. I'm already plotting my zones. I'm like, this is where the touch points are. This is the resistance. This is the support. Just like that's how my brain works.
Yeah, planning
Yeah,
it out.
planning out everything. Yeah, for sure. So we'll see how this trade plans out. My 15-minute. Let's see. Yeah, so this is, wait, let me take my magic arrow off. By the way, guys, if you don't know, I have magic arrows, okay? Wherever I put the arrow, it goes. So you watch me. Right, okay. Okay, there we go. And for GU, yeah, I'll see. David, are you selling GU?
I'm looking at it.
Okay. But you said you put the 1,000 lot, so I'd rather not take it then, right?
1,001, just to make sure.
Oh, okay. It's like an extra, the safe shot. Okay. Yeah, I mean, I'll see what happens, but if this low is going to be protected or not, if we start to print something bullish or not, I don't know.
Can I quickly share? Can you quickly put me on?
Yes, I can quickly put you on.
I'm just what I'm seeing is it looks like it's bearish structure, right?
Mm-hmm.
Low, lower low, lower high, lower low.
Mm-hmm.
So I'm just wondering, when do I buy? If I were looking for buys, I know we have zones and stuff, but if I just look at current market, if I just look at this structure, for me, the highest probability would be, I think, if we first break above this high.
Okay.
Because you made a small lower high. I think if we break above this one, and then maybe a smaller pullback, and then continue up.
Mm-hmm.
That's my view for longs.
Mm-hmm.
But for shorts, I will be short until we reach maybe these lows. But if we break above this high, then that's a confirmation for me to go higher.
Mm-hmm.
But EU, if we get to the 50 minutes, EU is a bit different because we are already making bullish structure. So this could just be the pullback before continue up higher.
Mm-hmm.
So it will be interesting. It's always for me difficult when EU and GU is not moving exactly the same, or when they are a bit off. When they're in line and in sync, then it's nice.
It is nice, for sure. It is nice. And normally that's why I'm like, normally I would have 2 trades open. That's like my standard. And I can find the setup sometimes on London session and New York. And there will be days when I have 4 setups a day. But then there will be days where I have no setup a day because simply it just doesn't print. But it is what you say when they go in alignment, and they normally go one way, right? Because it's against the dollar. So it just, it's nice. But another thing is, maybe quickly before we finish the live stream, David, do you ever look into the price filament when, for example, yesterday there was a big move, and now what's happening is it looks like the price is trying to recover that big move. Yeah. What happened? Yeah. That's why.
I take note of it, but I never base trades off of it completely, or just base trades off of it. But I do know, wick fills, often if you have a candle and you have a big wick, there are times when that's not a rejection necessarily. It's just a pullback on the lower time frames, and then the next candle prints.
Yes.
And then fills that wick or a part of it, and either closes below and continues lower, or just trades lower, creates another wick, and then only goes higher towards the upside. So yeah, I do take note of those occurrences as well.
Yeah. But the only thing is, that could be that extra confirmation, that's something on your checklist. Okay.
But,
keep it on, but don't base the trade.
Checklist.
Another checklist. I know. No, but the thing is also, it's good to have a checklist actually, but let's say you only take first 3 as a confirmation, and if the rest 7 doesn't, if they're not checked, you're still taking a trade, but it's just like an extra confirmation. And one of those checklists could be the AI analysis, what the AI analysis is saying. And, and that doesn't mean if AI is telling me now GU is going to go down and I'm wanting to buy, I mean, I don't care. I'm going to base it off my strategy, what my strategy is telling me. And I don't mind what AI is saying. But then over a time, I can collect the data and see, actually, AI is quite right. You know, when it says don't go, maybe then I can think maybe I could do something with that AI analysis. So yeah, anyhow, yeah, let's finish this off. Just want to say thank you for everyone who did join us in. Thank you for everyone who watched. Now, a reminder, go and register for that webinar. The vet is now register.
Where's the balloons and the pop outs?
I know, right? Yes, register for the webinar, guys. It's going to be everything about AI, how I use it, and how you can use it as well to help yourself make better decisions in the market. It's happening 1 p.m. today, 1 p.m. GMT time. Just register. And if you cannot make it live, that's okay, because you can watch the recording. But other than that, David, I wish you all the best. You know, the next week is a big week for you and family. So
Yes.
big event happening. I'm so excited. So excited. Anyhow, take care, guys. Use proper risk management, and me and Devet will see you again at some point in the future. That sounds
Stay
so
tuned.
nice. Right. Okay,
Yes.
guys.
Thanks. Bye.
Bye. Bye-bye.